Hello and welcome to Mint. Today we confront a trillion shilling question affecting every Kenyan. Our nation's public debt has amounted to 11.36 trillion shillings with a significant portion borrowed from us. Yes, Kenyan citizens through Treasury bills and Treasury bonds. But you may ask, what exactly are Treasury bills and Treasury bonds? And more importantly, since these are government's primary means of borrowing from its people, should you invest in them? Are they a haven for your money, and how do they work in a way that benefits your financial future? We are breaking down these powerful investment tools to help you make informed decisions. Stay with us. Your next smart move could start today on Mint. Also, today on Mint, buy now, pay later. Why is this payment concept exploding across Kenya? The photo that saved a business. How one picture helped a 17-year-old catering business from the verge of collapse. From spice to success. Meet the culinary artist who turned a love for flavor into a thriving business.
Earn it, spend it, save, invest. Earn it, spend it, save, invest. Mola, kila siku niko chesa. Mola, make more bila stress. Mola, kila siku wesa. Mola, make more bila stress.
Just as you might take out a loan for a new business or to pay school fees, the government also needs to raise funds for roads, hospitals, or our collective future. Instead of going to a bank, it comes to us, the citizens. How? By selling what are essentially government IOUs, which are Treasury bills and Treasury bonds. This week on Money Moves, we demystify these powerful investment vehicles. What's the difference between a bill and a bond? What are the returns? We provide you with all the information you need to determine if lending to the government is the right or wise investment for you.
Earn it, spend it, save, invest.
The Kenyan government spends more than it earns, meaning that revenues collected through taxes and other means can only go so far to cover the expenses. The government then has to borrow locally and internationally to cover the gap. As part of its domestic borrowing, the government sells Treasury bonds and Treasury bills to banks, pension funds, and insurance companies. It also sells them to the general public. Kenya's total public debt is approximately 11.36 trillion Kenya shillings, with a portion of that debt held in the form of Treasury bills and Treasury bonds issued to Kenyans who lend to the government. So, here's the trillion shilling question. Should you invest in Treasury bills and Treasury bonds? But before we get ahead of ourselves, what are Treasury bills and Treasury bonds?
For Treasury bills, they issue in tenors of 3 months, 6 months, and 1 year. So that's where the cash element comes in, because it's short term. Anything that with a short-term investment horizon is deemed as cash or near cash, whereas anything above 1 year is now where the different assets comes in. Treasury bonds is like you're bonded for the period of your investment. So for instance, if you buy a 2-year Treasury bond, it means that for the next 2 years, you've given Government of Kenya your money, whatever it is. Minimum investment is 50,000. And then it's a bond with the Government of Kenya. So the commitment by the Government of Kenya is every 6 months, they will be paying you back what you call a coupon payment up until the end of the 2 years, and then you get back your investment.
Deciding between the two investment options will depend on several factors. First, your investment horizon, which refers to the length of time you intend to hold an investment before requiring it. This implies Treasury bills for the short-term horizon and Treasury bonds for the long-term horizon. 2. Tax breaks.
What you have seen being favorite is now what you call infrastructure bonds. This is a segment of Treasury bonds. On the coupon that you receive from the government, there is no withholding tax that the government withholds. So that has really attracted the masses, be it retail investors, be it local institutions, because of that tax-free element.
The third factor is the coupon rate, also referred to as the interest rate. Due to their long-term nature, Treasury bonds have a higher coupon rate compared to Treasury bills. The fourth factor is liquidity. Both T-bills and T-bonds have high liquidity. However, T-bills offer lower yields and do not provide periodic interest payments. Whether T-bills and T-bonds interest rates are favorable depends on an investor's financial goals, risk tolerance, and broader economic context. However, interest rates are influenced by demand and supply, the microeconomic environment, and the central bank rate, which acts as the benchmark for all lending rates.
So for instance, most investors, as they participate in the auctions, be it treasury bills and treasury bonds, the kind of return that they will want is the return at least will ensure that they are compensated adequately for future inflation risk that might crop up. If you look at where inflation was a year ago in January, it was around 9%. So from investors' perspective, they were also sort of pricing in that inflation will remain 9%, and a result of that, they will want now to be adequately compensated by that higher inflation. But you've seen gradually that central bank rate has been reduced. Right now is at 10%. Because of the benchmark rate trending lower, that has also affected expectations by even the market participants as they go to demand the extra yield from the government.
Given that the government is constantly in debt, how secure are your investments in T-bills and T-bonds?
That's the good thing, that we are perpetually in debt. And it's not a peculiar situation in Kenya, just to put it out there. There's just a few countries run what you call a balanced budget, whereby their revenues that they get from taxes and non-tax revenue is able now to fully finance the spending plan. If you look at the SGR project, yes, we borrowed in dollars, but the revenues from SGR is in Kenya shillings. So the thing is, how do we service this currency mismatch? How do we increase our exports to be strong enough, to be high enough to be able to service this debt without creating some pressure? So those are the mechanisms that the government needs to ensure are in place to reduce the debt vulnerabilities.
As the government continues to borrow, institutions and private citizens will continue to invest. With a minimum investment of 50,000 Kenya shillings, you can transform that perpetual debt into your personal wealth.
Earn it, spend it, save, invest.
From traditional investments to modern credit, retail purchases have evolved. In recent years, buy now, pay later has exploded across the country. The market is booming, with projections showing it will reach 152 billion Kenya shillings this year alone. But why are Kenyans so eager to jump on the BNPL bandwagon? Is it just convenience, or is there more to the story? We'll explore the factors driving this massive growth and help you understand the pros and cons of these popular spending concepts.
Some Kenyans live for promotions while others save for months to acquire that luxurious item. The one thing in common for all these consumers is the lack of the total fixed amount to purchase the item. Bearing this in mind, Buy Now, Pay Later or BNPL is now the new kid in town, allowing people to get once-in-a-lifetime deals.
BNPL is how do I call it? I'll start by saying it's a problem solver. It's one of the things that we needed as a country and as Africa and all. So if you want to understand the context of how the economies work in Africa. So we have a lot of people that are unbanked. So there is no way for them to get like structured loans for things that they need. We have an economy whereby people are living hand to mouth on a day-by-day basis. The amount of money that they make that day is what they need to spend within that day. So this is a method of flexible payment whereby any person can get an asset or something that they need, can get it upfront and make the payments later.
Though not a totally new concept, Buy Now, Pay Later can be seen as an improved form of hire purchase, allowing faster access to items.
So if you look at a lot of history, let's say in developed nations, they had something that is called a layaway, where, for example, if you wanted to buy a TV, you'll go into a supermarket and then pay some money for the TV, they'll set it aside for you, and then you keep paying but not using the TV, and then later when you finish paying, that's when you start using the TV. Coming back close to Kenya, we had something like Kenya Credit Associations, whereby I see my parents and other parents who are actually getting TVs and home theaters through this method. So if you look at what we have, the traditional type of hire purchase and etc, like it was a bit, so one, time consuming, like the amount of time you need. So there's a lot of paperwork, bureaucracy.
Being able to get items fast can be like a drug. Buy now, pay later providers are keen to ensure responsible lending.
We're very key on responsible lending. So we need to ensure that you don't have other loans that you're struggling with, so that it's easier for you to repay this loan. We'll understand which specific stage you're operating, so that we know if you're comfortable to make the daily payment. So literally, we've gotten a lot of people that are not technologically savvy. The technology is used behind the scenes, like in terms of credit rating, in terms of processes to make everything easier. But for the people that are using it, we just want to empower them so that they start even using that technology.
With the ease of access, the know your customer aspect is key in buy now, pay later.
It's a very risky business, and it's a business where companies that do not have the same values as we have will not venture into such type of business. We're looking at a business whereby we have people that do not have access to these products from the traditional methods that exist. So from our point of view, our customers are always good people. So from the start, we have a lot of good customers, and most of them are repeat customers. So there is always that risk, but it goes back to the KYC that we do. So we do proper KYC to not limit per se, because we are not giving out money. But in terms of responsible lending, one of the things that we actually do is we do not allow a customer to have more than one loan during their life cycle. So for example, if you have a border loan, you can only have that loan, and you cannot have two border loans.
Overall, buy now, pay later is a product for everyone, but mostly people without access to credit.
If you are well paid, you have access to capital, access to the existing traditional lending methods, then BNPL is not for you, because it's easy for you to get what you need. But to the target audience that we have, which is a majority of Kenyans, this is a lifesaver. People that do not have access to traditional credit systems, people that do not have bank accounts, people that cannot afford to pay things upfront, have an opportunity to actually get benefits from things that will help them.
While its convenience is undeniable and the market continues to grow at an incredible pace, it's also good to read and understand the fine print of buy now, pay later. Let's take a short break. Discover how a single stunning photograph pulled a 17-year-old catering business back from the edge of collapse.
Earn it, spend it, save, invest. Moolah, kila siku waste that moolah, make more bila stress.
Welcome back to Mint, where we explore the world of personal finance, making it simple and relatable for you. Whether you're looking to earn, spend, save, or invest, we've got you covered.
Earn it, spend it, save, invest.
On Inside Hustle, we revisit the resilience that defined the pandemic era. In 2020, Jimton Okeyo's catering business, which had thrived for 17 years, was brought to a grinding halt. But a single beautiful photo of his food became the unexpected silver lining. This picture saved a business, helped it flourish in a whole new way after a crisis.
Jimton Okeyo had been running Harvest Star, a lucrative catering business, for 17 years when the COVID-19 pandemic hit in March 2020. But all this came to a halt when the Kenyan government implemented a lockdown to curb the spread of coronavirus.
The lockdown stopped everything. There were no events, you can't cook for anyone. And we have quite a bit of stock in our cold room for foods.
As Jimton pondered what he'd do with all that food, a visit from his wife's friends became a light bulb moment that would lead to a new venture.
My wife had some ladies who were coming to visit. I decided to make fish. It's one of my good specialties. Before they ate the food, we took a photo of how we had set the table for the guests. And of course, my wife posted it online to some of her friends. And the guys were like, I want that kind of fish. I want that kind of food, An idea dropped in my mind, by the way, because since I have a lot of stock of fish, I can actually sell this. And that is how we started doing my good food.
At first, Jimton only delivered fried fish, but when he realized that people were wary of leaving their homes, even to shop, he began packaging different types of food, which he would deliver to their doorsteps. His customer base grew fast in less than 2 months as more people started placing orders.
Samosas, pre-cooked or fully cooked, you want lunch foods, you want groceries from the market. All that was out of the demand of what people were requesting us.
But when shopping, cooking, packaging, and delivering the food became too big a job for one person to handle, Jimton sought the services of his staff.
Most of my staff were at home, guys were not working. But I realized that it was too much. So I brought in some staff members and then we engaged now in proper supplies. And so the thing grew quite fast.
Marketing the new venture wasn't difficult, as the delivery business would ride on the success of Harvey Star.
We already have clients and people were able to begin ordering from the clients base we already had, and that made it very, very easy for us.
Jimton would also not have to look for business space, as he'd use the premises for Harvey Star, which had been out of commission due to coronavirus. However, the foodpreneur realized that using his vehicle to make deliveries consumed too much fuel and ate into his profits.
To run around and to go fast and deliver and come back, we needed a motorbike. So we acquired 2 motorbikes, branded them, and now we were able to deliver. And that cut down the cost of delivery.
When the government lifted the COVID-19 restrictions in March 2022, things started looking up for Harvey Star too.
In the recent past, I think we cooked for 1,000 people in an event. Numbers have gone back and we can see business is flowing back very well.
Food handling is sensitive, and there are strict guidelines that those in the business must adhere to.
There are protocols that guide us, the Ministry of Health, the county government, the licensing that goes with food. We have to adhere to that so that our business is up to standard.
The food delivery business in Kenya is experiencing rapid growth, and Jimton is looking to capitalize on this by expanding My Good Food network.
The demand has increased day by day in terms of what the client needs, and also the demand on our end. So even increasing our staff base, getting more motorbikes so that we can do more deliveries. There's quite a bit of inquiries that we are getting from offices, staff food. Most offices, even when they require food, they don't want food cooked within their facilities.
And for anyone wanting to go into the food business, Jimton advises,
food is very time conscious. You have to be very time conscious. From the time the client is ordering to the delivery, it should not take more than 1 hour. It's good to have a vision, because the vision is what keeps you going.
Earn it, spend it, save, invest.
And finally, on Coins to Capital, meet an entrepreneur who has truly mastered the art of flavor. Limo Magani, founder of Adisia Taste Buddies, reveals how he transformed his passion for bold flavors into a thriving business and shares his secrets for pairing spices to craft unforgettable meals.
whether frying, grilling, baking, or roasting, herbs and spices permeate the air with mouth-watering smells and elevate your taste by awakening your taste buds on the first bite. So, what does it take to manufacture spices? Founder of Adisia Taste Buddies, Limo Magani's mission was to ensure that even the blandest dish tasted like a 5-star meal. Magani, an industrial chemist, culinary artist, and entrepreneur, started the brand, which manufactures mixed blend spices, in 2019. This is a brand under his company, El's Food Lab Limited.
I just came up with the formulation of the recipes, and all our blends have up to over 10 different spices, seeds, and herbs combined.
With over 5 years of experience as a chef, Magani honed his skills in ingredient pairing and flavor creation. From the role of associate chef to sous chef and ultimately head chef, He meticulously crafted seasoning spices, sauces, and marinades, the very products that have become the heart of Adisia taste buddies.
Currently, we deal in seasoning spices, and we have 4 variants. We have red meat seasoning blend, vegetable seasoning blend, poultry seasoning blend, and seafood seasoning blend.
Although the ingredients for the 4 variants pair well with the specific dishes, one can use any of them on whichever food they desire.
For instance, the seafood seasoning blend, the specific ingredients used pair very well with all types of fish. Then the poultry one, all the ingredients used pair well with all types of poultry, ranging from chicken, duck, ostrich, etc. Then the red meat one, the ingredients used as well pair up with all types of red meat dishes, ranging from pork, lamb, goat, and cow. Then the vegetable one, you can use it to season your sukuma wiki, mboga ya kienyeji, or potato wedges.
Adisia was incorporated in 2019, but before his product hit the shelves in 2021, Magani had work to do. To ensure the success of the startup, he needed a solid business plan and marketing plan. Additionally, he had to secure funding, follow legal procedures, and build his customer base. Therefore, he enrolled at the Kenya Industrial Research and Development Institution, which offers training courses for MSMEs, and dove into product research and development. Later, the institution would produce Adisia products.
My research was more of the business aspect and also the product development aspect. Because during product development, you have to know if the salt is too much, or it's little, or it's perfectly balanced.
The products also had to be fit for human consumption, so Magani sought certification from the Kenya Bureau of Standards.
They check if the facility is up to the standards. Then after that, they take your products for testing. Once your products pass the testing, then you are awarded with a KEP certification.
Like most SMEs, Adisia needed startup capital. Magani employed the bootstrapping method and invested 500,000 Kenyan shillings, then supplemented this by selling company shares. He also needed the expertise to run a business.
For the business aspect, we did access to skill, access to market, and access to finance through a bootstrapping program facilitated by Invest in Africa.
With the lessons from the program, he pitched Adisia to potential financiers who he won over. Studying the market and using different business models has also led to the growth of Adisia's customer base.
Our business model expands from B2C to B2B. So for B2C, business to clients, we send deliveries, door-to-door deliveries, or during such expos or pop-up markets, they come and buy, and also they can buy at the retail markets. For B2B, we do deliveries to hoteliers and other retailers or gift shops as well. Adisia Taste Buddies is not just seasoning spices. It's a range of consumable products. So currently we are adding sauces ranging from chili sauces, tomato sauces, ketchup, barbecue sauce, etc. So hopefully by the end of this year, we'll have them in the market as well.
Limo's journey from a culinary artist to building a business shows just how far creativity and hard work can take you. That's it for this episode of Mints. We hope you're leaving with fresh ideas about investing, spending, and what it takes to keep going as an entrepreneur, and maybe a new respect for flair too. For more information, visit mint at mula.co.ke or tv47.digital. Stay safe and keep minting. Until next week, I'm Lydia Nyawera.